Hello, class, and welcome to BACC 531 Managerial Accounting. My name is Dr. Jake Brock, and I'll be your professor for the course this bi-term. I serve as a tenured associate professor of accounting and missions and ministry at the University of the Cumberlands, where, in addition, I also serve as the accounting faculty leader, the academic lead for the UC internship program, and the coordinator of business internship programs in the School of Business and Communications. I'm glad that each of you are in the course this bi-term. Whether you come from a finance background or you haven't looked at accounting in years, this class is designed to meet you where you are and to help move you toward thinking like an executive decision maker who can use accounting information to empower strategy. Managerial accounting, as you'll learn, is not about memorizing rules. It's about using financial information to help make better decisions. Throughout this course, as we explore it together, we'll focus on how managers use accounting data to plan, to evaluate performance, and ultimately to drive strategy. At its core, this class will explore how organizations use accounting information internally. Unlike financial accounting, which is aimed at external financial reporting, managerial accounting is all about decision making from the perspective of inside the organization, namely the perspective of managers at various roles, levels, and capacities. We'll look at how executives evaluate costs and profitability, how they make pricing and production decisions, how they plan strategically for the future, and also how they focus on aligning operations with organizational goals using the managerial accounting information that we'll harness, analyze, and process together in this course. By the end of the class, you should feel more confident interpreting financial data and using it to support business decisions, whether you're in finance, operations, consulting, leadership, or another professional context. Let's walk through what you'll be doing first in week one because getting started smoothly is a major key to success in graduate studies. First, you'll see a set of ungraded orientation materials in the week one module in ILER. These are important as they'll help you to understand how the course is structured and how to navigate the various tools that we'll be using together. Next, you'll also find in that same module narrated PowerPoint slides and concept overview videos related to our week one content. These will introduce the key ideas for the week and will give you a foundation before diving into your more complex assignments. You'll also complete a graded welcome and introduction discussion post, and this is your opportunity to introduce yourself, to share your background and goals, and to start building connections with your classmates. Let me encourage you on the front of that welcome and introduction discussion post to also take this seriously. This assignment helps to establish the learning community that we'll rely on throughout the course. And I want to point out with that one of the major benefits of a graduate business education is the networking opportunities afforded by studying in an MBA program. In this class and throughout your program, you'll have the opportunity to connect with professionals across a wide range of industries, fields, and professions who are all looking to grow and advance in their own professional competency, knowledge, and skill set alongside of you. Take advantage of this opportunity by connecting with your class colleagues, getting to know them better throughout the course, and growing your social and professional network through the connections you forge with them throughout our studies together over this bi-term. Because this is an MBA level class, we assume some familiarity with accounting, but we'll also support you if you need a refresher or need some additional building when it comes to your accounting knowledge and skills. That's why in this first week's module, you'll also find the Accounting Basics review videos. If it's been a while since your last accounting class, I strongly encourage you to take some time, watch these, and refresh or expand your knowledge and your competency on basic accounting methods, functionalities, techniques, and skills. You'll also this week begin working with some important data visualization tools, starting with the week one Getting Started in Tableau assignment. You'll be using Tableau Public, which is a free version of Tableau. This assignment is going to help introduce you to data visualization. In addition, it will also help you start thinking about how accounting data can be communicated visually and will also assist you in building a skill set that's highly valuable in today's business environment. Don't worry if you've never used Tableau before. We will ease into it step by step as this series of assignments using this visualization platform will be progressive and will be delivered on a step-by-step basis. A significant portion of your week will also be completed using McGraw-Hill Connect. For week one, the McGraw-Hill Connect assignments will include your reading assignments, your lecture video quiz, your weekly exercises, and also in week one, a comprehensive accounting cycle problem. These are designed to reinforce the concepts that we'll explore and to give you hands on practice within the laboratory of McGraw Hill Connect. A quick note about accessing and getting started with these materials. This course is set up as what's called a single sign on system. That means that you don't need a separate login for McGraw Hill Connect. Instead, you'll simply click on the assignment links directly in iLearn, our Blackboard environment, and then follow the on-screen instructions where you'll be taken straight into the system with full access to the textbook or to the textbook itself, as well as those Connect assignments. If you run into any issues, let me know and we'll work on resolving those together. If you've not already done so, please take a moment to go through that sign-on process and get started with accessing your Connect learning materials. Now, let's briefly preview what you'll be learning in terms of Chapter 1 dealing with managerial accounting and cost concepts. As we explore Chapter 1 content together this week, we'll lay a foundation for everything else that we're going to do in our studies and throughout this course together. First, you'll learn how to classify costs by assigning them to cost objects. We'll examine direct and indirect costs. Direct costs are those that can be easily traced to a product or service without violating the cost benefit constraint. Indirect costs, in contrast, are those that are shared and cannot be as easily traced to those individual products or services that are being manufactured or provided to our end customers. Next, we'll also explore together the three basic manufacturing cost categories, including direct materials, direct labor, and manufacturing overhead. Understanding those categories is going to be essential for analyzing production and profitability as we build on that foundational knowledge in the coming weeks and chapters together. You'll also explore this week cost classifications that are used in financial reporting as well. We examine product costs, which are those that are tied to inventory and recorded when costs or when goods are sold and costs are incurred related to those goods. And then, of course, period costs, which are those that are expensed in the period in which they are incurred. They're not capitalized as part of inventory, but instead they will hit the income statement in the period in which they're incurred in support of business operations and activities, namely selling, general, and administrative type expenses. Then we'll shift to cost behavior, which is going to be critical for planning. Variable costs in terms of behavior refer to those types of costs that change with different activity levels. Variable costs are called variable because they vary. As I often teach my undergraduate accounting students, we are not creative namers in accounting. We can be very creative people, but we're not creative accountants and we're not creative namers. We're very pragmatic, practical in how we name and how we use terminology, and therefore, as you're learning or refamiliarizing yourself with these concepts, pay close attention to the names and to how these elements are titled. Variable costs vary in terms of the aggregate. They may be stable on a per unit basis, but as more of that material is incurred, you're going to have an increase in total variable costs. If something is $5 in terms of cost per unit, some material that we're using, that's a variable cost because with every additional unit we acquire, we're going to incur $5 additional dollars of cost. Thus, that cost will vary with the overall level of activity. That contrasts with what we refer to as fixed costs, which remain constant within a relevant range. If I'm paying rent on a particular facility and I have a rental contract negotiated that costs, let's say, $10,000 per month, within the relevant range, that cost isn't going to change, regardless of the number or the volume of products that I make or I manufacture or the volume of service I provide. Within that set range, unless I have to expand or do a major expansion of facilities, I'm paying that as a flat rate rental amount that isn't going to change with the level of activity. Variable costs vary in total, fixed costs are fixed. Mixed cost, as the name implies, are a hybrid of the two. Mixed costs contain both fixed and variable components. For this, in terms of illustration, think about some of your utility bills, such as your monthly water bill or your monthly electric bill. Oftentimes, these utility bills that we pay as individual consumers contain a flat rate portion, some basic amount that you have to pay just to maintain electric service or to maintain water service to your household, and then a variable component where that bill will scale in proportion with the usage, typically charged on a per unit basis depending on what it is that's being billed for. Again, water, which is often measured in gallons, or electricity, various other utilities can fall into that category as well. Those represent mixed costs both for individuals and business entities because there's a fixed cost, a flat rate component, as well as a variable component that changes in relation to activity. We'll also introduce decision making concepts, including relevant costs and irrelevant costs. As the name implies, relevant costs are those costs that affect a decision and thus are relevant to a decision setting or scenario. Irrelevant costs are those that do not. Oftentimes, they're referred to in practice as sunk costs. It's not that we don't care about them at all. It's not that they aren't legitimate costs. It's simply that they are costs that are either already incurred and locked in, or they're costs that in some other way are not relevant to the decision at hand. In order to make good decisions, we have to be able to sort through and to understand what cost categories are relevant to that decision and what costs are going to be irrelevant in that decision paradigm. This distinction is vital to long term as well as short term tactical decision making for managers at various levels. In addition, we'll also learn how to prepare income statements for a merchandising company in two formats. First, we'll examine and refresh our understanding of the traditional format for the income statement that's used for external financial reporting. If you have an accounting background, that is the traditional multi step income statement we think of under full absorption costing, where we have sales less cost of goods sold gives us gross profit less our various selling, general, and administrative expenses, our interest and our taxes, and various other components to arrive ultimately at net income, and then, of course, our calculation of earnings per share, both basic and diluted, depending on the nature of the capital structure. There's an alternative income statement that is not permitted under US GAAP for external financial reporting, but can become very helpful in a number of ways for managerial or internal executive strategic analytical purposes, and that's going to be the contribution format income statement, often called the contribution margin income statement. That we'll examine together a little bit further along, but it's going to change the basic structure of the components. We're not coming up with a whole new system of accounting. We're not making up new elements, but instead we're simply going to rearrange how things are presented on the income statement so that we can emphasize and understand an important concept we'll dive into called contribution margin, the excess of sales over our variable costs, essentially the portion of our sales amount that can be put toward fixed costs, and then once fixed costs are covered, ultimately to go toward our operating profit, our margin. We'll talk about that more as we explore together, as well as strategic implications of that contribution margin concept, but we'll explore those basic formats for the income statement together as well. So that's a quick overview of what to expect in week one as we get things rolling. My advice to you in general, as your professor for the course and getting started, is to stay organized, to start early, and don't hesitate to ask questions. Many of you have already reached out to me by email today as you're getting started with various questions and components. I want to say both thank you for reaching out and to encourage you to do that as we move along. I'll be glad to help with and to address any questions that you have. This course builds over time, so remember that developing a strong foundation now will help improve and make things easier as we journey forward into future weeks. I'm looking forward to journeying through the course with you over the coming weeks together, getting to know and getting to work with all of you. Again, welcome to BACC 531 Managerial Accounting. As always, if you have any questions as you get started, please reach out and let me know. You can reach me at my email address, jake.brock@ucumberlands.edu. I will look forward to hearing from you. With that, look forward to joining and to journeying through the class with you. Have a wonderful week and have a wonderful start to your studies together.